Hello there, Boeing employees, and welcome. Thank you so much for joining us today. I'm Sam. I'll be your moderator throughout this presentation. I'll also be behind the scenes monitoring. If you have any questions, please feel free to ask away. It's completely anonymous. There is an anonymous Q&A box on the screen. Ask away, and I will make sure one of our Boeing-focused advisors can reach out to you after this webinar has ended to address those questions or concerns with you through phone or email. Today, we have Michael Corgett on, one of our Boeing-focused advisors, who's here today to give you some pension updates and just give you some information that might be useful to you if you are near the transition out of Boeing and looking to retire. Before Michael comes on, very quickly, I would like to remind you that we are not Boeing here. We are not affiliated nor endorsed by Boeing, so please keep that in mind. We are a completely independent group of financial advisors. Next, while Michael is speaking, I will be entering some links into the chat as well. They will pop up above Michael's head. You can click directly on those. They're going to guide you to our website where you can book a free 15 or 30-minute block of time with one of our Boeing-focused advisors, such as Michael himself, to speak to them about your retirement. You can also follow us on LinkedIn and YouTube. We post a lot of content for Boeing employees and retirees, so we really feel you'd get value out of it if you considered giving us a follow. And if you do, thank you so much in advance. We truly appreciate your support. Without further ado, let us jump right into it now with Michael Corgett.
Thank you, Sam, and welcome everyone to today's presentation. Today we're going to talk a little bit about the Boeing Value Pension Plan and the two different calculators or calculations that go into how your pension benefit is determined. It's a basic discussion, and we would look forward to the opportunity to talk more about you, which I'll mention here in a few moments. But let's go ahead and dive right into the retirement discussion, starting first with the basics. Where are the sources of your retirement income? Traditionally, and in the case of many of the people that I'm talking to today, it's going to come from three different places. Your pension, obviously we're going to talk about that here today. Social Security, and that all depends on the age that you elect to take your Social Security, and then your 401k and other investment savings like IRAs or Roth IRAs, investment properties, other part-time income, and so on. We call this the three-legged stool approach, and all three of these are very important as far as going into and having a comfortable retirement. Again, let's talk about the Boeing Pension Value Plan. We're going to talk a little bit about normal retirement, early retirement, how benefits are calculated, the two calculation formulas, and then how those benefits would be paid out over the rest of your life. Normal retirement is traditionally age 65. The first day of the month that you turn 65 is, again, your normal retirement date. There is an early retirement date, and we have three different options here: age 55 or older with at least 10 years of vested service, age 62 or older with at least just 1 year of service. And if you have a heritage plan, again, there are a number of companies that have been acquired over the years by Boeing, and many of those folks are still working, and they may have a heritage benefit from their prior employer that would also be added to and combined with whatever you earned as a Boeing employee. There's two different formulas, as I mentioned. We have the credited-based formula, where there are no early retirement penalties. It's based on your eligible pay. You'll receive interest credits on that as well. The heritage benefit that I mentioned will also be added to the calculation, and there's this times mirror indexing that will be added to this formula if it is applicable. And then the other formula is the minimum benefit formula. This is a very basic formula, which I'll go into here momentarily. You will receive the greater of the two when you retire. All right, just keep that in mind. Both calculations are run. You will get a monthly income benefit out of the calculation, and you will receive the greater of the two. This looks complex. It's not really that complex, and obviously it would be easier if we had an opportunity to work with you on just sitting down, looking on the Fidelity site, and helping you to calculate various pension benefits on various retirement ages. But again, the first formula is the credited based formula. It's benefit credits times interest credits, plus any heritage credits that you may have earned from a prior employer, plus any of these times mirror indexing benefits if they are applicable. All of these are converted into a total single life monthly annuity. The annual benefit credit is higher the older that you are, as you could see here. You get benefit credits as this table illustrates. So obviously the older you are, the bigger the credit will be as far as going into your pension calculation under this formula. The minimum benefit formula, as I mentioned, it's a lot simpler. For normal retirement, which is age 65, it's $95 a month times the years of benefit service or credited service that you have. That equals a monthly benefit. Again, a single life annuity. For early retirement, it is $95 a month times your years of benefit service minus 4% for each benefit year beginning before the age of 65. And then if you retire before you are eligible, it's the same formula except the penalty is 6% per year prior to age 65. Okay. Again, this is the minimum benefit formula, which has penalties for early retirement. The credited formula does not. And again, too, both of these calculations are run and you are going to get the greater of the two monthly benefits in retirement. How are those benefits paid out? You ask. I understand. Well, a single life annuity is just that. It's a monthly benefit that is payable to you for the rest of your life. If you choose the single life annuity and are married, and it does not, obviously a single life annuity does not provide any monthly benefit to your spouse, they must sign off on that. So, because they're not going to receive anything. It is the largest monthly benefit that you would receive because it is just based on you and your mortality. The single life annuity, again, the biggest monthly benefit, but there are joint and survivor options, as you can see here. 50, 75, and 100% benefits to the surviving spouse. The difference here is that you're going to receive a smaller monthly benefit to provide a monthly benefit to your spouse. The more benefit that you want to provide to your spouse, the smaller your monthly benefit's going to be. A simple example would be, let's say a single life annuity is 100% or $100 a month. A joint and 50% survivor might be $90 a month and the spouse gets 50% of that. A joint and 75% survivor might be $85 a month, 15% reduction, and the spouse would receive 75% of that benefit. And finally, 100% to the surviving spouse, you might get 80 cents or $80 a month, and the spouse would also get $80 a month. If and when you die and you have one of these benefits, that's when your spousal benefit will be kicked up. If your spouse predeceases you, there is a pop-up benefit, which your benefit would go from the reduced monthly for the survivor spouse up to the single life annuity amount. So again, you can provide your spouse with a benefit if you so choose, if it's overall as part of your retirement plan. There is a life annuity with a 10-year period certain. This is something, let's say you are either single or your spouse has already unfortunately passed away. You go into retirement, but you want to leave something to a beneficiary or beneficiaries, like your children. Well, this 10-year certain is essentially you're going to get a slightly reduced monthly benefit. If you die during that 10-year period, the balance of those 10 years will be paid to your named beneficiaries. So hypothetically, if you die 5 years into your retirement, your monthly benefit would continue for another 5 years to your named beneficiary or beneficiaries. All right, so there is an option to provide something to your family or whomever you choose with this option if it's important to you. And again, this all has to be a part of your retirement plan. There is an accelerated income option. If you retire before the age of 62, you can receive a larger benefit. And then once you reach the age of 62 and start your Social Security, regardless of whether you do start it or not, your benefit would be reduced. This is sort of a Social Security offset calculation. So if you're 58, you can get a larger monthly benefit, and then it would reduce when you turn 62 when you could start your Social Security. This is something to consider as well. A lot of older Fortune 500 companies have this accelerated income option. Back in the day, and I'm going back 20 or 30 years ago, even people retired back then at those ages. My father was fortunate enough to retire early from IBM back in the day. He ironically did a lot of work with Boeing for IBM. But again, we've just given a brief synopsis of what your options are as far as the pension benefit is considered. There is a lump sum option as well, which we didn't talk about, but it is an option. It typically is not the best option to consider, but you can get a lump sum pension benefit calculation run as well, and then compare that to the single life annuities. What's important is, do you have a plan? It's very important to have a plan and to start planning for your retirement sooner rather than later. We work with a lot of people. I've been in this business a long time. And individuals who started planning 5, 10, 15, or 20 years prior to retirement are going to be better off than those people that consider what they're going to do in their retirement when they get an offer and haven't done anything up to that point in time. Most Americans don't have a plan. Take advantage of an opportunity, because we would look forward to the opportunity to putting together a complementary cash flow analysis. We have a lot of experience. We've been working with Fortune 500 companies like Boeing for a long time. We've got offices nationwide, and we've got a great knowledge of your pension as well as your 401k and other benefits. We've been working with Boeing employees for a long, long time. So take advantage of the complementary cash flow, getting a second opinion. If you're talking with an advisor and you believe you want a second opinion, give us a chance. Does your current advisor understand your benefits? Are they working with an investment team, which we do here at the retirement group? What value do they offer you and your family? In other words, just the knowledge of helping you to achieve a long, comfortable, fruitful retirement. And do they offer that detailed financial analysis? And then the elephant in the room, we all manage retirement assets for a living. What fees do they charge on those assets? Are those fees competitive? Do they have tiered fee schedules based on assets under management? These are all things to consider. This is how we do earn our living, by managing retirement assets for our clients. So this is something else to consider as well. You can schedule a meeting by sending us an email or giving us a call at the email or the phone number here. And then you can schedule a meeting by scanning this QR code here on the left with myself or one of my colleagues. Definitely scan the QR code on the right and follow us on our LinkedIn page. We have a great LinkedIn page, lots of resources, lots of posts on lots of different subjects. You can also see our future webinar schedules, and we also maintain a library of our webinars on our website, as well as we have a YouTube page, the Retirement Group, where we keep a huge library of our old and even current webinars. I've said a lot in a very short period of time. I do hope this was helpful. Please give us a call, schedule a meeting, send us an email. We would look forward to the opportunity to speak with you. With that, I'll let you go. Thank you and have a great day.